All right, we're going to jump right into it. I'm going to show you how to input your information because if you put in inaccurate or unhelpful information, if you don't put it in correctly, you're not necessarily going to get the most accurate output. And I just want you to be able to clearly see where you stand and hopefully help that direct you on what your next steps might be for yourself. So we're going to walk through a sample scenario here. I just have, John Smith and co-client Smith. But the point is, what do you do at each of these stages? So if you're single, you can just get rid of this. You can say, okay, delete co-client, it's just you. But if you're married, keep them both. You would click on each of these tabs and then input information. So for example, for you doing this, you would click on the first one and this pops up over here. Obviously, you should have your correct first name and last name since you already put it in. And then you can put in your birthday. That is important because it affects what you can and can't do, different opportunities from a financial perspective. Put in your correct state. And then planning horizon. This isn't super critical for you at this point, but if you're 30, if you're 40, from a planning perspective, we probably should assume you're going to live into your 90s. If you're retired, people have different opinions on this, but even then it might make sense from a conservative perspective, conservatively planning, to look at somewhere in the 90s. So if you want, you can just leave this where it is, 94, whatever, but you would add your information in here and click save. Same thing if you're married. You can add their information in here. If you are married, make sure you do put their information in because that will affect opportunities, strategies, and so forth, let alone also if you change nothing, what today looks like for you moving forward. So you would put their information in and click save. So now, if you don't have kids, this is pretty much all there is. If you do want to add different people to who is included in your family, you would just click add participant, child, grandchild. If you have grandchildren, you can put them in there. This information becomes relevant as we look at these next stages, let alone how it impacts your overall financial situation today and long term. So if you have children, you can click child, and then you just add their information. This is important. Dependent. So if they're under 18, you probably would put yes. If they're over 18, technically if they're in college, you can consider them a dependent. But just differentiating between whether you have young children or adult children. So I'm going to just hit cancel. I'm going to hit delete on this. If you have children, don't click delete, click save. For grandchild, it doesn't give you the option for your grandchild to be a dependent. That's not to say because maybe you do have custody over them, but it's just as it relates to how it affects your taxes. So again, you would just put your grandchild's information in here. I'm going to click delete. You would click save if you do have grandchildren. Once you have all your family in here, you just click next. All right, salary, income, and so forth. So you can add different incomes. I'm just going to first start by looking at the salary block here. So you would click on salary and say, okay, I can name this whatever I want. You would come in here and say, okay, has the income started? Yes, I'm currently making this income. Income ends. So you would say, am I assuming that this type of income is going to end at a certain point? Maybe you plan to retire in 5 years. Or maybe you're younger and you say, I don't really know. I'm just going to say, at my retirement. There's a lot of different options in here. If you aren't clear on what some of these mean, you can just contact me. And at the bottom of this video somewhere, I'll put my contact information if for some reason you got here and you don't know how to contact me. And then you can put in, from an assumption perspective, what is your annual increase? So maybe I roughly get a 3% raise per year. You could put that in. Obviously, you'd put in your annual amount. So if your salary is $60,000 or if it's $160,000 or $360,000, whatever it is, you would put that in here. And then lastly, on this tab specifically, exclude from SS tax. That just means, is this income subject to Social Security taxes. I would guess that most of you putting this in you're gonna leave this unchecked, but it is something to look at. If you do know, yes, mine is excluded, then you would check that. If you're not sure, it probably isn't, and it's more conservative anyway to just keep this unchecked if you're unsure. So you would click save. Same thing if you're married. You would add their information in here, the exact same scenario. Social Security, if you are young and you're not sure, you can just effectively leave these blank. If you are closer to retirement, then you might have a Social Security estimate statement. I would encourage you to go to the Social Security website, look at what your expected FRA income would be. So that would, most of you, it's probably going to be 67. If it's not, you would know that. But then you could come down here and say, I have a statement value instead of just using a simple estimate. And then you can say what that monthly benefit would be, and you would just get all that information from the statement. If you're already receiving it, you would click the already receiving it button. I'm going to click cancel. Same thing for co-client. Now the important thing here is other income. So some of you might be self-employed. It's important that you would use this tab, or some of you might have pensions or annuities or so forth. Other options, maybe you're married and either you or your spouse get bonuses or other sorts of income. Maybe you expect to receive an inheritance in the future and you have a fairly clear picture of what that might be. You can click inheritance. I'm not going to go through each of these tabs because this video would be extremely long, but you can click on these if they apply to you. If you're unsure how to input the information around that, again, contact me. It'll be somewhere in this video for you to click on. Distribution is important. I just want to touch on this. Oh, actually, this is not what I was thinking. I was thinking this would be business distribution, so that's elsewhere. So I'm going to delete this. All right, so I'm going to assume for now that we're good. We added all of our income in here that's relevant. I'm going to click next. Savings. So this is a big one. It just defaults these three. You can add other saving options over here. So hopefully you understand what 401ks are, or like non-retirement accounts. It just gives these as two options. We'll click through these and then I'll show other options for you to click on and how to input that information. So let's say you have a 401k, whether you're a business owner or not. You can add in the name there. You can add in the contribution percentage. So maybe you're contributing 5%, maybe you're of your income, maybe you're contributing 10. If you're doing it based on percentage, you would leave it as this. What's the target? Percentage of salary income. If you say, hey, I want to assume moving forward that I actually maximize my contribution, this box goes away and it just says max. And the software will know that based on that point to increase how much you're saving in this type of account every year moving forward. When does it start? When does it end? Again, matches. So maybe you have an employer match of 100% up to 3%. So this is not saying like what percent of are they matching you. Like for example, if your employer is giving you a 5% match, you would not put 5% here. You would put 5% here, match 2. This reflects the maximum percentage of the client's salary the employer will match. Now maybe some of you might have a 50% match up to 6%. So what that would mean is you are still getting a 3% match, but you have to put in 6. And so in that scenario, you would put in 50% here and 6% there. Again, if you have questions, just reach out. Some of you might be getting secondary matches or flat matches. So for example, you would know this if you have it, but there's something called a 401k safe harbor plan. You don't get matches in that scenario, but you would get a flat match, maybe 3%. So if that's the case, you would want to make sure you put 0 here, 0 here, and then 3% or whatever the percentage is there. Lastly, if the match is to a Roth account, let's say 100% of what your employer matches for you goes to a Roth 401k, then you would put 100% here. So you just want to highlight that as well. Again, self-employed, if the saving is associated with self-employment income, because you're a business owner, you would check this box. That's not saying all business owners would check this box, but if you're self-employed and you know that, you would check it. Okay, I'm going to hit save. Same thing for if you're married, exact same boxes, same scenario. So I'm just going to click cancel. Now, that's like the first stage of savings that people might have. There's also non-retirement accounts. So maybe you know that you're investing, $15,000 a year into a non-retirement account, not a 401k, not a Roth account, or not an IRA. It's just an individual brokerage account or a taxable account. You would come in here and add that information. It's called taxable. You want to make sure you click, okay, who owns this? Same thing for the 401ks or anything else. But hopefully this is pretty straightforward of how much, or of what you would put here. So I'm going to click cancel, and I want to touch on what other options do you have. So I'm going to pause here and look. Okay, so it says you have 401ks, 403bs, 457s, or maybe you're doing a traditional IRA or a Roth IRA or a health savings account. Maybe you have accounts saving for education costs for your kids or grandkids. Maybe that's a 529. We already talked about taxable. Other, this is getting a little bit more in depth, but maybe as a business owner, you have a cash balance pension, or maybe, you or your spouse is a high level, executive or director level in a business, and they get deferred comp, or maybe they get profit sharing, or there's, ESPPs, ESOPs, like you would know this if you have them. But here would be what some of those options look like. Okay. Now I want to touch on the more common ones. So Roth IRAs, there's different ways to do Roth IRAs. Maybe you're just doing a normal, like a regular Roth IRA contribution. That would be this one. If you're making too much money to make Roth contributions, we would want to make sure we put this in as a backdoor Roth IRA, because it does affect the liquidity and what options you have later on in life. SEP IRA, you would know if you have that. Simple IRA, you would know if you have that. Now, some of this might be a little bit overwhelming. I'm just trying to make it clear for what to do, not necessarily what you want to do in the future, but what you're doing currently right now. The whole point of this is to help you see, if you change nothing into the future, what does your current financial picture look like? And are you going to be able to actually create the life and lifestyle you want? So same thing here for traditional IRA, SEP IRA, simple. I'm going to go over just one of these. Again, if you have questions because I didn't go over something that you have, you can contact me. So I'm going to click Roth IRA. Same thing here. You can add a name of whatever, maybe it's John's Roth IRA, or you want to name it something different. Maybe it's a Fidelity Roth IRA. Like, you want to highlight where it is. Whatever. You can name it however you want. Same thing for owner. Did you start or not? Are you going to start in the future? You can do that. When does it end? This could be your retirement. It could be, like, let's say you plan to work till you're 65, but your wife, this is in your wife's name, and maybe she's a stay-at-home mom, or maybe she's going to retire at 55. You don't necessarily want to put her, you could put still your retirement age, but it's possible for you to contribute to an account on your spouse's behalf as long as the two of you have income if you're filing your taxes jointly. So I would just want to say here, like, be cognizant, be aware of what you're clicking here, because it will affect the numbers of how your financial picture looks today. Again, same thing. Are you doing a targeted dollar amount, or are you trying to maximize your contributions here? You would change that. I believe if you click maximum, yeah, that box goes away. So if you're doing an annual dollar amount and you know that you're not able, or you're at least not currently maximizing, but you are trying to increase how much you're contributing per year by a certain percentage, you would put that here. If you maximize it, the software does it automatically for you. So I'm going to click Save. All right, next. Again, you can have different things in here, but I'm just going to continue moving forward. So net worth. This one's really important. So the software lets you aggregate all of your accounts in. You can just link them, and if you do that, it'll update for you on an ongoing basis, pretty much daily moving forward. Now, I will say if you do link them, it doesn't give, your login information. It doesn't give access to the system or to me or anyone to your accounts. It just allows this system to ping, let's say, Fidelity or your bank or whatever, to just see how much is in there, and if it's investments, what investments are in there. Again, not access. I will also say that it's possible if you link these that it might not allow you to link it at a certain institution or bank, or maybe you link it and, a month from now or a year from now, the connection breaks. That's normal. You would just go back in and try to relink. But here you can add pretty much anything. So maybe you have bank accounts, maybe you have a credit card, all the investment accounts. So whether they're 401ks, IRAs, taxable accounts, and so, 529 plans, so forth, those would show up here. If you have stock plans, you would know that. Any debt would show up here. And then if you own a home, you can come here. If, let's say you have rental properties, that would show up here. Same thing for insurance and business. Okay, so I'm going to show you how you would do this. If you want to actually try to link your account, you would click Link Account, and you would click Aggregation. Tamarack is not for you, that's for my clients, but Aggregation is what you would click. And then it shows up here. Once it loads, you basically just come in and search whatever institution. So maybe you have a Fidelity account. You would type in Fidelity, and you would say, okay, well, which one? If you have an employer plan, like a 401k, that might be Net Benefits. If you just have your own IRA at Fidelity, it's probably just Fidelity Investments. So I just want to be clear here, like when you type something in, there might be a bunch of options. If you aren't sure and you want help, again, just reach out to me. I can help you. But yeah, this is what you would do. You would click on, okay, Fidelity Investments, and it might take a second to load. Oh, I clicked Net Benefits, but whatever. You would just click Continue. It's going to open a page, and it's basically as if you're logging in. Again, it's not giving any access to the system. It's just establishing a connection so that you don't have to continuously manually update everything into the future. I'm going to hit exit on this, but I'm going to close this out. But that's how you would do that. You can do that for bank accounts. You can do that for credit cards. You can do that for, again, retirement accounts, taxable accounts, whatever. All your investments you can do that for. Maybe you don't want to link, or maybe when you try to link, it doesn't let you actually link it for whatever reason. You can still come in here to add account and do it manually. Okay, so same thing for bank, investment. If you have like rental properties, you can come in here and do it like this. Insurance. So if you have different insurance policies, you can come in here and add them. And then I'm not going to highlight all of these. Hopefully this is fairly straightforward. This might be actually like the most complex page. If you have issues, again, just let me know. But I want to click on business here because if you got to this point, you might have a business. You can name your business here. When it says include in plan, it means, are you assuming that the business itself as an asset would be included in your financial plan? So for example, maybe you run a business and you want to try to sell that business in 10 years. Or maybe you have your own business and when you go to retire, however far away from now that is, you want to sell the business at that point. If you are if you're assuming that you're going to use the value of the business and whatever you could sell it for in your financial goals, you would keep this as yes. If not, you would just say either no or I still want to include it on my net worth, but I'm not planning on using it to fund my financial goals. Then you would click balance sheet only. What type of business? Hopefully you know that. Who's the owner? You, your spouse, joint. And then here, this is getting a little bit more in the weeds, but I want to highlight it. Simple growth. This would be like, are you assuming the business is going to grow just a static percentage per year? So maybe you're assuming 10% growth per year. That would be simple growth. Detailed schedule would be, it's going to open up a bunch more options. I'm not going to go through this, but then you would basically input what your assumptions would be of where the business grows year by year. But if you keep it simple, annual growth, maybe we're assuming 10%. Actually, let's say just 15% for fun. What's the current value? You might not know. I'm not advocating that you should know or whatever, but I'm just going to say like maybe the business is currently worth $1 million. Maybe you're doing, let's say it's worth, let's say 500,000. Okay. And then value accumulation. This is saying, let's look at this. If standard is chosen, profits will not be retained and distributions will have no effect. This is a little bit more complex. I'm not really going to get into that right now. Let's just keep moving forward past this. If you do have questions on this, just, again, you can contact me. Revenue and expense approach. This is probably easiest for all of you if you just keep it all this simple approach rather than detailed schedule. Again, you can do detailed if you want, if you really want, but for the sake of this tutorial and step-by-step guide, you can just add in, okay, what's annual revenue? Maybe you're doing, 1.25 million in revenue, and maybe your expenses, let's say you're doing 20% margins. Actually, let me make this simple just for math, for the math purposes. Let's say you're doing $1 million in revenue and you're doing 20% margins. That would mean in this box you would type in 800,000 because you're making 200,000 in profit in that scenario. You would put in your expenses. Obviously, it would output your profit. Here you would want to put in, okay, do you have expectations on revenue growth? And then so this is important. And it says this applies to annual revenue and annual distributions, which we'll get to below. Like, are you taking a certain amount of profit out per year? Expense growth, you can put those assumptions in. Distribution growth, are you taking a certain dollar amount out? Are you taking a certain amount of pre-tax profit out or revenue? And then if so, how much and what do you expect that to grow? So for example, maybe you're currently doing, $50,000 in distribution, but you want to try to grow your profits by, I think we said revenue by 15%. Maybe you want to grow your distributions each year by 10%. I don't know, whatever you're thinking. And then, you can add some information here of, okay, when did you start the business? If you're planning on selling, when do you plan on selling? Cost basis means like how much money did you basically put into it? That's going to affect the tax consequences at the end if/when you go to sell it. And then cost of sale. I always just like to say, it's hard to say, but let's just say like 5%, meaning like as you go through a sales process for a business, there are expenses, bringing in experts to do different things, M&A, accounting, or lawyers, or whatever. We would just put in some percentage of a sale, and then you would say sale option. Are you going to do it, you're going to sell through installments, like someone buys it and they pay you the value over 5 years, or are they just paying you all out front? So that's how you would do this. I'm just going to click save here. I'm not going to go through all of this because this video would be an hour and a half long. I'm going to just fast forward a little bit. So again, you can input all of your assets here. It is important that you do that because I don't want you to end up getting through all of this and then it says like, oh, you have a 10% chance of success. Like the whole goal, the whole reason I'm putting this video together for you is so that you know how and what to put in from an information perspective so that the output gives you, hopefully, more accurate information. Okay, so let's go to next. expenses. So here this would be like roughly how much are you spending per month right now. So this is pre-retirement for right now. So I don't know. Let's say you're spending $6,000 a month. I have no idea. Just whatever. So so monthly expense would be $6,000. And we're just going to say simple for simplicity right now. You'd click save, and then tax expenses and fees. So here it would be, are you married, filing jointly? Are you not married, you file single? Do you have a local tax rate? I'm just going to put 1%. You would know. Well, maybe you don't know, but you can figure that out. And then if you have an advisor right now, you could put a percentage in here. It is important that you actually do check this tab, because if you don't have an advisor and you just bypass this, it's going to assume that you have 1% fees going forward. So if you don't have an advisor, you would just put 0, probably. If you do, hopefully you know what those fees look like. You can put in whatever that percentage is. I'm just going to say 0 for right now. And then if you have other expenses, it's uncommon that people to put in a whole another category here. The main thing is just roughly how much do you spend per month? And then from there, do you have local taxes? Do you have an advisor or not? And how do you file your taxes, jointly versus single? You'd click next, and then in here you have goals. So do you have specific goals of when you want to retire? Okay, what age? When retirement comes, how much are you hoping to spend per month? So for this example, we said, you're currently spending $6,000 a month. Maybe in retirement you want to spend $10,000. I don't know. This is assuming you could change this if you want, but if you keep the settings the same or how they currently are, it stays in there as inflation adjusted. I'm not going to go through the rest. Probably just keep it inflation adjusted and simple. So we'll say save. This is saying how much might healthcare cost, or what do you want to assume for retirement. If you want to get real granular, you can go into this. If not, you can leave that blank. And then one of the main things, at least that I see, that people don't account for from a long-term, throughout the rest of your life wealth perspective, especially for retirement planning, is long-term care. I'm not going to go deep into this, but this is something that you could look at of there might be real costs at end of life. It is fairly common for that, at least for most families. So that's what that means. But you can have a bunch more other goals. Maybe you have, you have college goals for kids. Maybe you want to buy a car in, 5 years. Maybe you have kids and you want to plan for paying for their weddings. Maybe you want to buy investment properties. Maybe you want to do gifting. So whether that's charitable gifting or gifting to non-charitable entities, maybe your children, maybe something else. Maybe you want to plan to have a certain amount of legacy money that goes to your kids. I'd actually recommend you not do that one, because it can be, if you want to leave a certain amount to your kids, I would recommend not doing legacy as a goal, because it can confuse the outputs. But there's a lot of different goals you can put in here. You can add any of them. I'm not going to go through them because I don't know your situation and I don't want to waste everybody's time. But you can go through that, and if you have a goal, you can click on it, add the information. If you're confused on what should be put in there when you click on it, again, reach out to me. And then from here, you would click complete. Now, this output is going to be probably not look too great. I have no idea what it's going to show. But if we click complete, this is what you're going to be taken to. And so this is the entire system. System meaning the software output. So we got dashboard, investments, retirement, insurance, education, tax. Retirement is probably going to be one of the main ones. What's your likelihood of success? Again, we barely put anything in here, so it just says 0. But you can look at details or action items below here and move dials, change strategies and so forth. You can click edit and add other things in here. So maybe you didn't include, you're only doing a Roth IRA, but maybe you want to say, okay, I want to save more of my income. What does it look like if I add an HSA? Or what does it look like if, as a business owner, I added a SEP IRA and so forth? So there's a lot of things you can do in here. If you want help, by all means, again, reach out to me. I'm I'm not saying that would, from a help perspective consultation, I'll gladly look at what you're doing and help you figure out like how to input things. If you're looking for me to provide actual advice or like legitimate services to you, I'm not saying that that's going to be free. It depends on the situation, but in all likelihood, that might look like you just hiring me to provide one-time help or ongoing help. I'm saying that's an option if you want. If you just want help on, hey, how do I add information and so forth, I'd be happy to try to help you there. But there's a lot of different things you can do in here. You can play in it in the future. I plan on making videos to walk through how do you do different things. I just don't want this video to be an hour. So that's what it looks like adding your information in, what the output looks like, and then you can play around in here and see, what does the tax situation look like for you? What about different strategies? Maybe I forgot to add something, and you can go back in here and add it in. Again, like what happens if I move different dials for retirement planning or just my assets in general? What happens if, scenario A plays out? What's my likelihood of success? What happens if the market drops immediately by X%? You can move this. What happens if, you and your wife live 5 years longer, or healthcare costs is higher, or taxes increase? You can do a lot in this software. Again, in the future, I'll lay out more. But the whole point of this tutorial, this step-by-step guide, was simply to help you know how to input your information so that when you get to this point, and especially see retirement analysis or tax planning and so forth, to try to have the most accurate information to help you make progress moving forward. Again, if you have any questions, feel free to reach out, and I'd be happy to try to help where it makes sense.